by verifying it yourself. You have organizations that verify information that they get from companies. There are very few of them. One of the most outstanding is the tax department, where they have inspectors who will verify the information. Or you use management to verify with yourself, or you use or auditors to verify information. That is how you reduce the risk of being misled by the audit. We also touched on this relationship, which I said we touched on this. Let's not go too much into it. What I want to speak to today is the types of audit that exist. We said audit is the accumulation and evaluation of evidence from the information that has been provided. In your life as accountants or finance people, you are going to meet the word audit being used in generally these three major categories. There would be something called an operational audit. Are you there?
Yes, sir.
Yes,
Yeah,
sir, but you are
but come again.
se urisile.
Kilisile, okay. Where are you? How far did I see you? This, I did not speak to it because I spoke to it last time. I'm saying we have the external users, me and yourself, and me and you guys. We have companies, which are the clients who produce financial information. The auditor sits in between to verify information that is produced by the client, because these external users, they provide services to the client and they need that information in this particular case, they use as if these are investors. Users provide financial information to the client to say this is how the company is performing. sorry. Then these people then provide capital. These are investors. They are, and the auditor checks on this financial information and issues a report which tells the external users whether to rely on this financial information. This client is using auditors to, he says to auditors, tell these people that these external users, this could be banks, this could be creditors, this could be shareholders, tell these people that the information that I've provided, this word information, I mean balance sheet, what the financial records that I've provided, they can be relied on so that these relationships, they start working. The banks can rely on the financial statement. The external parties can, the labor people can rely. So we need the auditors to tell everyone that yes, our reporting as management, as the chief financial officer, is in accordance with the set criteria. Therefore, people must rely on us, even if there is that conflict, that agency conflict that I mentioned. On a normal day, there is an inherent risk that management will falsify accounts to produce a better story than the proper real story. That's an inherent risk, because management gets paid out of a good story. If they produce a bad story from the accounts, they get fired. They will be performed below par. They will be fired by the board of directors, and the board of directors will be fired by the shareholders if they produce poor results. So because of that, management is always under pressure to overstate revenue, understate expenses, that is increase profit, understate liabilities, overstate debtors. So by bringing in the auditor, he's checking that pressure that is inherent, how has it been managed by the client? And the auditor will come and say, yes, I think that these records, they are fairly in line with the set criteria, so you can rely on them. Are you there?
Yes, sir.
Yes, sir.
So in your life, going forward, starting today, you are going to meet a lot of terms describing audit. You are going to be types of audits. You are likely to meet a term called operational audit. This is not generally because in companies we have policies and procedures and processes. And what do I mean by that? We have operational procedures that when you operate in a company, things like the procurement regulations need to be followed. When you do procurement, you need to start with this one raising, and then we go to the next stage. Then operations have to follow certain procedures. When you start an engine, when you start a crusher machine, you need to first switch gear one, then you do point number 2, then you go to point number 3. Those procedures are normally meant for issues that have to do with safety, issues that have to do with efficiency and effectiveness of the processes within organization. Organizations by nature perform using different processes. In a university situation, we can have an operational audit on the whole registration process of students to establish where there are bottlenecks. So what we'll then do is to do an operational audit of the whole registration process of students. Yesterday, I passed by the student center. I saw queues and queues of students queuing in front of the data department. If there are queues like that snake around the whole building, that means there's an operational ineffectiveness and there are efficiency issues in the operation. So you can bring a third party to come and audit the operations of student registration. There are many processes that run within the organization at UB that may require operational audit. After coming with an operational audit, you need to give recommendations how to improve in the registration of students, because I think that issues of efficiencies is not effective, is not delivering results. It could be effective, but efficiencies, the use of resources as little as possible to maximize benefit efficiency is not some in the registration process. That's what I saw yesterday when I went to the student center. Operational audit of the registration of students. You may have an operational audit of how to allocate accommodation to students. You check the processes and see if there are any loopholes. You are looking for efficiency and effectiveness, and normally you provide the reports, then management will correct that on the operational side. You may meet the term audit again being used against compliance to say there are specific rules, compliance with environmental regulations, compliance with safety regulation, compliance with the law, whether you are paying people above the minimum wage, compliance with the proportion of women or disabled, laws with regards to the proportion of women. Are we complying? You may have a compliance audit. So when we sit in an audit in a board, I happen to sit in the Bauer board, and I'm the chairman of the finance and audit committee there. When we sit there, we review some compliance. Management will be asked to provide compliance audit of all the regulations in the country. So they will produce evidence that procedures and rules and regulations with the Bauer has met all procedures and regulations within the organization. Then we have financial statement audit. This is what we will be talking about for the whole next 6 or 7 weeks. We'll be financial statements audit or accounting records audit. You may meet a term again called forensic audit. Forensic audit refers to audit of financial statements or data in a manner that will provide evidence that can be used in provide a report on the audit that can be used in a court of law.
Come again, sir.
A forensic audit means an audit of financial statements or data, an audit of an organization, producing evidence that can be used in a court of law. You know, the evidence that we use in a normal audit, we use it to determine whether there was compliance with the generally accepted accounting practices or IFRSs. But when we do a forensic audit, we not only do we establish whether the accounts were produced in accordance to the general accepted practices, we also prepare the evidence such that it can be used to convict whoever any misdeed that could have happened or fraud that could have happened in the court. So there are formats that you use so that this evidence can be submitted to lawyers, and you prove transaction by transaction that yes, on the 21st of this there was a deposit of this which left the office as 15,000. When we went to the bank, it arrived as 1,500. You show that as a continuous evidence. There's specific reports that you get trained on to produce forensic audit reports. And normally forensic audit, there is a course which there's a course I've also done forensic audit, a little bit of forensic. I have a diploma in forensic audit. There's a course that you can do in forensic audit that prepares you to prepare such reports on how you meet a lawyer. A lawyer will not be a finance person, and you prepare reports such that lawyers can articulate those reports in court as evidence to convict someone who has committed fraud. So after an audit, after fraud has been discovered, you bring in an audit, your forensic auditor, to come and put up evidence such that it can be used as evidence in court. You are likely to meet those 4 audit terms. Financial audit, they will just refer to an audit that establishes whether the accounts were prepared in accordance with the generally accepted accounting principles. You will have to check, you may meet a term called compliance audit, where we speak to whether the organization is meeting certain rules or agreements within the country. You may meet operational audit, where we check the operations to see if they're efficient or effective within the organization. But for this course, we are going to be dealing with audit of financial statements to check if the financial statements were prepared in accordance with the generally accepted accounting practices or international financial reporting standards. Are we together?
Yes, sir.
Yes, sir.
Yes. These are the type of audits. So when someone is saying there's an audit that is happening, you must be first you be biased and think it's a financial audit, but it could be a compliance audit, or it could be an operational audit, or it could be a forensic audit. But most of the time we deal with operational financial audit. But if you go to operations within the organization, you may find that they're also doing some operational audit within the organization. So who are the auditors? Types of auditors. I pulled this from somewhere in the internet. Auditors, there are generally 3 types, 4 or so types of auditors. First, we have what we always default as these are certified public accountants or firms that do audits all over the place. As you can see, I've put them, this is probably the latest statistics in terms of their turnover per. These are partnerships. Audit firms are partnerships. There is a difference. Have you done commercial lawyers yet? You know the difference between a partnership and a company? You're quiet. Are you still on, or I've lost connection?
We are on, sir.
So a company is limited. A private company is limited. The liability, the amount of loss from the person who's setting up the company shall be limited to the money that he has put into the company. A partnership is unregistered. It's like a sole trade. There's no personal limit. You take liability. If the creditors sue a partnership, they sue the partnership. There's no difference between a partnership and the person who has started the partnership. So if you get sued in your personal capacity. So audit firms and lawyers are by law partnerships. So you cannot, if a lawyer commits a mistake, he's going to be sued in person. He cannot hide behind the veil and say, no, I'm an employee of the partnership of the law firm, sue the law firm and fight with the law firm. No, he gets sued because he was giving an opinion in his personal capacity. Similarly, with certified public accountants and firms, I'm a CPA or I'm a certified public accountant. That means I'm certified to prepare accounts for the public. And if I join one or two guys, we can form a certified public accountant firm that will do audits, and it will have also a nice name here that I can include. That will do audits. These are the 10 biggest audit firms in the world. And I think you have seen some of the names here. These are Deloitte and Touche. They make about 59.3 billion US dollars. That's massive. Price Waterhouse and Coopers. This is in the order in which the size. Ernst & Young, KPMG. You have seen some of the names around, isn't it?
Yes.
So if they say the top 4 public firms, they mean these 4. You can see the margin between the last one and the next one, how big it is. So normally the 4 biggest partnerships that do audits are these 4. You can see the margin in turnover. So normally the BDOs and the RSM are the small ones, and the Grant Thornton are the small ones. And these are partnerships. So if you want to form a partnership in Botswana, me and you may decide to form a partnerships to do an audit in Botswana. And we go and what do you call it? And we go and ask RSM International for us to use their name and their systems. And then we, in something like a franchise, and then we franchise this name, and they will give us their accounting and auditing softwares that we use in Botswana, and we will be partners in Botswana using RSM softwares and auditing software and processes and procedures and also and rules. So then we will be called RSM Botswana. Me and you have started. We are certified public accountants. We form a partnership. We go out to the world and set up and ask for franchise this name and come and set up here. And every year, and we pay them for using the RSM whatever name. Are you there?
Yes, sir.
So okay, good. So these are the firms. So those who are going to be going to work in the audit firms are likely to work for one of these. Or you may decide to have your own GT Tobeza audit firm that does not that is only in Botswana. But the challenge is that you need to develop sophisticated softwares that are able to assist you with the audit. And these guys are the ones who have the money and they've developed them and the skills and the processes over time. So the likelihood is that when you go to an Ernst & Young, you will find only Botswana partners, but they are called Ernst & Young. And there's not even a single person. You go to Zimbabwe, all Zimbabwean partners, but they're also called, and they're franchising the name, and they are paying some money at the end of each month. Are you getting me clearly, ladies and gentlemen?
Yes, sir.
Oh, sure. So you will be joining one of these. The next set of these are the certified public accountants and firms. Certified public accountants create firms because they have to work as partnerships. When they join together and form a partnership, that partnership is called a firm. And these are firms. So they audit all companies in the country that were registered under the Companies Act, and even smaller companies. Then we have the other smaller audit firms that are not the top, that are not international, that can audit domestic. But you can set up a audit partnership and you also audit big firms. So when I'm saying auditors, I'm referring the big four. I'm referring to this. Why big? Because of their turnover. You can see the margin. The next 34, 30, 45, 15, 50, 59. The big four. The rest are smaller ones. So then we have local ones. GT Tobeza's audit firm, and also the one with 2 rooms, operating a 2 rooms house office. Then we have the Auditor General. Generally, the Auditor General audit the government. Is another auditor that you may find, that you are likely to find in the economy. He operates in the same way as Deloitte, all these big firms, but he only audits government. It does not mean that government cannot be audited by these, but the Auditor General is the auditor of government. He has been established. Normally, the Auditor General has been established through an act of parliament, and they've been established through an act of parliament, and there are rules. There is the Auditor General recently. There's what is called Public Accounts Committee in Parliament. You might have heard of it. Did you hear of it over recently? That people were presenting to the Public Accounts Committee, ministers and government companies, state-owned entities. This Auditor General, they normally audit all government ministries and sometimes government state-owned entities, which is also a common name in Botswana is parastatal. Parastatals are companies or organizations that are partly owned by government. There is a name, they are called parastatals. In other economies, they are called state-owned entities. These are organizations that are, which are these organizations? These are Botswana, BPC, telecoms, all the parastatals you can think of, BRS, all parastatals, BITC, all the parastatals you can think of are also called state-owned entities. The Auditor General has jurisdiction over auditing government and state-owned entities. So sometimes because of capacity issues, the Auditor General then decides to outsource the audit of state-owned entities to these boys. He hires these boys who are in the private sector and many others to do the audit of state-owned entities on behalf of the Auditor General. Are we there?
Yes, sir.
So if you go to BPC, it's probably audited by Deloitte and Touche or PwC or EY or KPMG on behalf of the Auditor General because of capacity issues. Capacity in terms of skill could be in terms of volumes of work. There are too many audits that the Auditor General. The other set of auditors that you might find is auditors in the Botswana Unified Revenue Services. They have auditors, the tax agents who walk around and inspect whether companies have prepared their tax returns in an appropriate manner and have submitted the proper records as the tax that they were supposed to pay to the VRS. This is another set of auditors. The other, next time you may find a term internal audit, which can always confuse you. These are called external auditor. They're outside the company. They come from outside to come and audit. The certified public accountants. Internal auditors are within the organization. They are part of the payroll. They are paid by they fall within the organization. What is the purpose of an internal auditor? Is to ensure that all internal controls, all the processes and procedures within the organization are being followed. The recording of data is done properly to minimize the risk of the information being unreliable, which will later be audited by the external audit. So these ones are external auditors. Internal auditors on a day-to-day basis speak with management. They sit in the same building, check if internal controls, methods of doing things, whether they are being followed properly. If you know, an internal control is the process of methods of doing things within an organization. If it's done properly or not done properly, internal auditor will report to management that in Gaborone office, people are not signing the logbook for the vehicle. And if you don't sign the logbook for the vehicle, they make you using personal trips. That is an internal control mechanism of limiting staff from abusing staff vehicles. These are the police officers on a day-to-day basis. They ensure that if they are effective, the quality of the information that will be produced, which will after the end of the year will be audited by the certified public accountant, will be better. Then the certified public accountant will not take a long time auditing because the internal auditor was there on a day-to-day basis to ensure that the financial data that is being recorded properly, and that summarization and classification is done properly, and then that the financial statements are being produced properly, and we take it from there. Are you there?
Yes, sir.
Yes, sir.
You have learned the types of audits. You have learned the type of auditors. These were the two major things that we want you to grasp for today. On Monday, we shall discuss what services does the auditor provide? What kind of services? There's what is called assurance services, as distinguished between audit services by the audit firm. Those top 5, when they go into the premises of a client, what can they do as a service or cannot do as a service to the client as per the law? What does an Deloitte or an external auditor, when he comes into the premises to come and do an audit, what can he do or cannot do on behalf of the client? There's other services the client may say, no, I did not finish my fixed asset schedule. Can you complete it? The client may say, I need some tax calculations. The client may say, I need 1, 2, 3, 4. We are going to break down that and see what does the law say in terms of in terms of what are the duties and responsibilities of an auditor inside the client? What we mean by assurance services and audit services and non-assurance services that you can be tapped, the auditor can be engaged to do. The certified public accountant in your premises, he knows a lot of things. What can he do or not do in an audit firm, in a firm's environment, in a client's environment? So we stop there, ladies and gentlemen. You will notice that I did not post the notes because I'm still fixing them. Let me not post them again because I'm still fixing the part on assurance services as distinguished to audit services and non-assurance services. Then we may also go to discuss these terms because we are going to be using them a lot. Assurance services, non-assurance. What is assurance? What is attestation of what we mean by to attest? To say yes. What do we mean by assertions? What are the client's assertion? What are the client's assertion by a client saying, I have cash in the bank of 5,000. That's a client's assertion. The auditor's job is to attest that whether the assertion is correct. So we will discuss those things so that we understand them nicely. Then we proceed with our course outline slowly and nicely. Thank you very much, ladies and gentlemen. I know I've kept you, it's a Friday. Most of you, no, the attendance is not bad, 90 students. Most of you want to disappear into weekend. Don't overindulge. We meet again on Monday at 4 o'clock. I'll try and take the advice from the lady who gave advice that I must try and schedule the meeting so that you are able to all join easily. Have the best of weekend. Bye-bye.
Bye, sir.
Bye, sir.
Sure.
Bye, sir.
Sure, girls.
Sure, yes.